So I share my weekly view of the market. It's BTC. First of all, every one of you is familiar with the BTC cycles. That means when we follow this structure, then we are just in the middle of the bear market. But what does it mean in deep? I will explain you. So first of all, I give you an insight into the prediction with the Elliott wave. What does it mean here? Let's go to the past, to the previous cycle. After wave 5, we start the correction of A, B, C. So this C wave ended in a level between 1.3 of Fibonacci and 1.6 of Fibonacci. But important points in this cycle was what I marked here with 2 and also what I marked here with 1. Because when we go a little bit in a zoom, then we can see that we have an upside correction, and after this correction, we go to a lower level. When this cycle will repeat in the same way, then we also have here after the wave 5 A, B, C correction. And the current question is, in which level will this C wave end? And from when we just used the Fibonacci levels from the past, then we are already at the end. And what does it mean? We are lower as we was before, because the C wave here, the C wave end before the level 1.6 of Fibonacci. And in the current status, we are already reached this level, and of course, we also are lower. And that means it could be that we have, let's say, a panic sell-off. Let me explain a little bit about the Elliott wave method. In Elliott wave method, a C wave can be very hard and strong, and it can go very deep when you have a panic sell-off. And of course, we had this situation, and this make it possible that we reach a really low level of 2.236. The first scenario is that we go a little bit deeper. So that means we have a C wave, and the C wave means this is an impulsive wave, and we go from 1 to 2 to 3 to 4, and now we are in wave 5. And this wave 5 is not clear. Is wave 5 end here at the level of 16,000, or is it just wave 3 and we go a little bit higher for the correction with wave 4, and then we get the final wave into the lower levels of round about 50,000. From this level, I predict that we go up, because I don't see other way. Of course, there could be other possibilities, but with my opinion, when we reach a lower level again, then after this step, we go up. So, because then we finished wave 5, and important is that we have an open CME gap here, round about 80,000. And the probability is very high that we will close this one. But the main question is when we will close it. So that's why I also have an alternative scenario for you. And the alternative scenario is that we are already finished. So this also fitting to what I showed you before with the prediction that we don't have a panic, or let's say a hard panic sell-off, that we go to deeper levels, or let's say lower levels of corrections in Fibonacci from 2.2, and we are just already there, and now it's time to go a little bit higher. So, but in general, this is the big picture, what I can predict it for you. So, but now it's also important to analyze the correct waves from the past. And I will show you what I mean with this is I checked how deep was the first correction, then we go a little bit up again in a wave, and then we also have a correction of 47%. Here was it 52%. And in the last correction, what we have in the previous cycle, we go down 52% again. So I made an estimation because with my estimation, here the correction was not 55, it was 36%. And also here we just had 38%. So this information, I bring it to the AI and I analyzed together with the AI what could be a correction level for the last correction, what we had here of 52%. So the AI calculated, and I also have this meaning because it's just a percentage calculation, that we reach maybe round about 30%. Let's say here correct is 38%. And this brings us to a level of 55. With my opinion, of course, this is deep, but this is possible that we reach it. So with this information, I will show you a little bit the possibilities of the next steps. So important to understand is that I made a prediction in a shorter time frame. So you remember I explained this is an important point. We also have this point in the previous cycle, and when we go a little bit more deeper into this into the time frames, then we had a higher high, and after this we had a lower high. So I will explain you where these points are here. When we go to this here, then that means it is a prediction when we copy the same behavior from the market from the last cycle to the current cycle, then we also had this important point one, and then we had a higher high. After this, we had a lower high, and then we go down. And this is what I mean with this correction here, what I what I showed you before. The correction was in the past 52%. So after this, we really was at the bottom. So this from this point here, from this important point one, we need 182 days to reach the bottom. So, and now I want to copy this information to the current cycle. So when we copy this information to the current cycle, then we also will have after the lower high a correction to the lower levels. So, but a little bit also we have here a difference to the past because when we was at this point here, it was really interesting and I paid a lot of attention to this and it's a good idea to short here. But now we have the low, of course, we are also in line with this idea, but when we don't make a higher high, then we will follow the structure from the previous cycle and we will go to lower levels. I also think that we will, in this case, we will break this level of 60,000. When we predict this correction to lower levels, then we can reach the level of 45. Then we are in a buying zone. That means here we can accumulate a lot of Bitcoin because this will be the lowest level what I predicted for this bear market cycle. So the other possibility, and of course this also can be when we on top of the last higher high, what I marked here with H1, then it is a possibility that we directly close the CME gap. Of course, this is a possibility. In the next week, we will see this because when we build acceptance above this level here, from around about 72,000, then this opens the door for a move towards 74,000 And from this level out, when we break this level of 74,000, then it is, of course, it is a possibility that we go higher. And this scenario also fit into my wave account, what I showed you here, that we are all already finished with wave 5. The last thing what I want to explain is that when we go to a time frame of 4 hours, then it is interesting that we are really short. And this means that we have an advantage on the side to short. So, but important is what we also see here when we go into the time frame of 1 hour, then it is interesting. We have a new sequence in the long direction when we break the last higher high, what I also showed with this here. So when we break this level, build an acceptance about this level, then we also have a sequence following in the long direction. This is an important point that we can go to higher levels. But when we will reach this point, I will calculate my trades again. So thank you for your attention. See you next week.